What is going on, YouTube Nation? This is Dark Dividend. If you guys are new to my YouTube channel, make sure you subscribe and hit the notification bells so not miss future videos. Big news with Spirit Realty Capital with Realty Income. They're going to be buying them off in the future. That kind of sucks because that kind of hurts my quarterly dividend strategy. I like more competition, and especially with Real Estate Investment Trust. This one I had to capitalize on today. I was going to buy it even if this news didn't happen with Spirit Realty Capital. So I'm going to present to you my rationales as to why I'm buying them. I'm going to review them. Their dividend growth looks good, and you got to check out their FFO. I'm going to go over that information as well. So if you're new to this YouTube channel, make sure you subscribe and hit the notification bell so don't miss future videos. Smash that like button. Let's check this readout right now. And that Real Estate Investment Trust is Essential Properties Realty Trust. EPRT is a symbol, sitting at 2134. Past 5 years, actually almost, it's like in line, then beating the S&P. At one point in 2021, it was 3268. Right now, it's 2110. Started the year to date, it's down 6.65%. Past year, it's been down, okay, a little bit, 0.84%. That's not bad. So they were founded in 2016. Average volume is 1.41 million. The market cap is 3.33 billion US dollars. Year range is 2049 to 2643. Day range is 2086 to 2159. Previous close is 2110. Now let's check these guys out. So they acquire, own, and manage single-tenant properties that are net leased to middle-market companies operating in service-oriented or experience-based businesses. On their website, they state, "We have assembled a diversified portfolio using an investment strategy that focuses on properties leased to tenants and businesses such as restaurants, okay, including quick service, casual, family dining, car washes." Again, I mentioned Getty Realty, and then automotive services. That's like an arms race with all these REITs, medical services, convenience stores, entertainment, health and fitness, early childhood education, and other service industries. We believe that properties leased to tenants in these businesses are essential to the generation of the tenants' sales and profits and that these businesses exhibit favorable growth characteristics and are generally insulated from an e-commerce pressure. So 82.8% repeat business through existing relationships, 89% internally originated sales leaseback transactions, 38.8% tenant relationships. Okay, now let's see what's in their portfolio. That's a little bit more important. Okay, so now to their portfolio. They have 1,742 properties, 48 states, 360 tenants, 99.9% lease. Going down to their portfolio, 79.8% service, 13.2% experience, 4% retail, 3% other. Right here, they're big ones. They have some early childhood education, quick service, car washes, medical and dental, automotive services, casual dining, convenience stores, equipment rental and sales, family dining, pet care services, other services, entertainment, health and fitness, movie theaters, grocery, home furnishings, building materials. They have other industrial. So some of this in their portfolio is very strong. And again, diversification is very important because they, like, for example, movie theaters, they take a hit. At least these other acquisitions or their portfolio can, kind of take over if there's issues. So it's kind of like, I can kind of correlate it like VTI, VTI ETF. Look at how many companies VTI has, the Vanguard Total Stock Market. So if one little section or sector takes a hit, that's fine. They have all these other companies to back them up. So, the diversification is very important with this real estate investment trust. And again, if you're new to this channel, remember 90% of what they make have to go back to investors. That's the rule of a real estate investment trust. But being taxed on that, you have to report that as normal income. You can correct me if I'm wrong, but a lot of people put these real estate investment trusts into their IRAs because of the income and reporting things as income. Now, going on their portfolio, right here, auto service is 8.2%, casual dining is 6.9%, convenience stores 4.4%, entertainment is 8%, groceries 3.5%, car washes is 15.6%, early childhood education is 12%, quick service 10.8%, medical and dental is 10.6%. So right here, some of their top tenants are Equipment Share. They have 40 properties, Festival 6, 5-star, they have 10. Looks like Chicken and Pickle. I think this is a restaurant right here. Captain D's. You can correct me if I'm wrong. Mammoth Holdings, they have 17. Mr. Accredited Brands, they have 12. And Cadence Education, they have 21 tenants. So again, with their diversification right here, some of these states right here in Wisconsin, I better know my geography. Ohio's pretty big at 6.4%. Texas is 13.3%. And let's see, Florida is right at 6.4%. So that's not bad. Now, the other thing I want to go over is their FFO, but I'm going to first go over their revenue trends. So check out this increase in revenue. This is huge. 2016, this is annually in millions US dollars, 15.52 or $15.52 annually. 2017, 54, 2018, 96, 2019, 139, 2020, 164, 2021, 230, 2022, 286. So from 1552 to 286, huge increase in revenue. That is huge. Now let's go over a few more things. I want to go over their AFFO per share right here. And you have Agree Realty, which is up there. Right here, they're actually doing better than Realty Income. They are 14.7, Realty Income is 14.1. And there's a little Spirit Realty Capital. They're down there at 10.8. FFO per share growth, 7.4%. So they're in the yellow. They're running up there, okay? These two things are extremely attractive. So you're seeing the revenue trends, the FFO per share multiple, okay, 14.7%. And of course, Agree Realty Corporation, they are juggernaut. So that's why I like them. That's very impressive. But look at this. FFO per share growth, 7.4%. And where's Realty Income? That's at 2%. I mean, that's pretty good. Spirit Realty Capital is 1.0. So they're way up there. And there's my little Getty Realty right there. So way up there. And an mREIT is 2.1%. So you're seeing some really good trends. Very underrated real estate investment trust. Now we're going to jump to the dividend history. So I'm going to start in 2019. They distribute their dividends quarterly. So their quarterly dividend real estate investment trust, or REIT. 2019, they're 21 cents, 22 cents. Then 2020, 23 cents. A little stagnant. Blame the pandemic. 2021, 24 cents to 25 cents. Then 2022, 26 cents. 7 cents. And then 2023, 28 cents. So the dividend growth in 5 years, 6.66%. That's not bad. It's a high yield dividend stock. That's pretty decent dividend growth for a high yielder. They're sitting at 5.31%. If you bought one share, you made 112. The 5.31% dividend yield, and their dividend increases in the last 5 years is 9. And they're kind of a new kid on the block. So that's one thing that's attractive. So I'm going to show you how many shares I bought today. So today I threw $500 in. I'm down 0.51%, big deal, but I loaded up in 23 shares. So again, who cares about PE ratio? That is a real estate investment trust. So a lot of articles I also read, um, you know, they compared themselves, a lot of the people that did articles, they compared them to Realty Income, and I like the diversification of them. Again, the arms race with these cars and car washes, that's why I have Getty Realty. Everybody's doing this. So it's a big arms race for these cars, anything affiliated with cars, car wash, gas station. Car wash is huge though, or automotive services. That's a huge arms race. It's crazy. I've posted a few videos on this. So I'm gonna be buying more of these. Spirit Realty Capital, I have to really think about what I'm going to do with them because, again, you have this special that's coming on. May just hold on to them for a while and then eventually, once I make a profit from them, throw their revenue into other dividend stocks. And they are still going to distribute their dividend until this acquisition happens completely. But this helps. Kind of upset because I like a lot of diversification, and this changes my dividend investing strategy because Spirit Realty Capital is doing such a good job. But adding these guys in this real estate investment trust, I feel very good about that. I like the dividend growth that's going on. I like the price of what they're at. And there's just a lot of potential right now for them. So I'm going to continue to buy. Again, I'm not giving any financial advice. I'm going to jump to my disclaimer in probably about 30 seconds. But I really like this buy. I want to know what you think on this purchase that I made. And do you like this one? So if you're new to this YouTube channel, make sure you subscribe and hit notification bell so you don't miss future videos. And have a great Monday. I'm going to have a video for you tomorrow. And I'm going to jump to my disclaimer. So as a reminder, this is a disclaimer. Do not use this YouTube channel in any form of financial advice. This is strictly entertainment purposes only. I have it in my description. I've been buying this stock and I'm new to this stock. I cannot confirm if I'm going to be long with them. I do plan on holding on to them for the next 72 hours, but I really like this one. And if something drastically happens, I'll probably sell them. Again, make sure you do your due diligence when you buy stocks or invest in anything. You can gain money, you can lose money. It is best to seek financial advice with a financial advisor or somebody to give financial advice. I am not giving any financial advice whatsoever, and I'm not certified to give financial advice, so don't expect me to give financial advice. So you take care and have a great Monday.